It's Tuesday, August 18th, 2026. You're listening to the DX Today AI Daily Brief. Today, Nvidia guarantees more than $100 billion behind an Ohio data center leased by OpenAI. Anthropic's revenue run rate passes $65 billion. And Cursor takes direct aim at GitHub. Let's get into it.
Nvidia said Monday it will guarantee as much as $105 billion in financing behind one of the largest data centers ever built. The campus sits on former uranium enrichment land in Pike County, Ohio, and will be developed and owned by SB Energy, a SoftBank subsidiary. OpenAI has signed a 20-year lease. The site is designed for 8 gigawatts of computing capacity, supported by 10 gigawatts of newly built power generation, and the full project could cost as much as $500 billion. Nvidia will be the exclusive chip supplier and is separately investing $1.5 billion in SB Energy. Its guarantee is conditional. It covers lease and power obligations only if OpenAI defaults and the site cannot be released.
Now to the model makers.
Anthropic has told investors its annualized revenue run rate climbed past $65 billion at the end of July, according to Bloomberg. That figure is up more than sevenfold from where the company stood at the end of last year, and it puts Anthropic roughly 62% ahead of OpenAI's reported pace of about $40 billion. Run rate annualizes a single month, so it sits well ahead of booked revenue, but the trajectory is what investors are watching. The company is preparing for a public offering, with Morgan Stanley, Goldman Sachs, and JP Morgan working on the deal. Enterprise demand, particularly for coding tools, has driven much of the growth. Anthropic has not commented publicly on the figure.
Another chip story, shifting shape.
Groq has raised $350 million in a Series A, led by the Dallas firm Disruptive, valuing the company at $3.5 billion. That is roughly half what Groq was worth a year ago, before Nvidia struck a licensing deal with the startup and hired away much of its engineering talent. The round formalizes a pivot. Groq spent years building its own language processing units to challenge Nvidia on inference. It now operates as a neocloud, renting out Nvidia-powered data center capacity instead. That places it alongside CoreWeave, Lambda, and Nebius in an increasingly crowded field. Groq has now raised close to $1 billion in the 2 months since the pivot began.
Video generation next.
Higgsfield has closed a $400 million Series B at a $5.4 billion valuation, roughly 4 times what the AI video company was worth in January. Goldman Sachs and Intel anchored the round, alongside DST Global and Liberty Global. Founded by former Snap executive Alex Mashrabov, Higgsfield builds tools for generating images and video, including a cinema studio aimed at filmmakers and a marketing studio for agencies. The company says annualized revenue has gone from about $20 million to $700 million in a year, with 30 million users across 200 countries. Usage of its agent-based products has grown 42-fold in 3 months, since a supercomputer rollout in May.
From pictures to voice.
Wispr has raised $280 million in a Series B led by Menlo Ventures, valuing the voice startup at $2 billion. The round arrives less than 10 months after its last raise and brings total funding to $361 million. Wispr Flow, its dictation app, is used by millions of consumers and more than 100,000 businesses, and revenue has grown more than 150% for 4 consecutive quarters. Alongside the funding, Wispr released a new in-house speech model called Canto, which it says cuts recognition error rates in loud environments from about 30% to under 10%. The company is now pushing beyond dictation into meeting notes.
Robotics now.
SoftBank has put $200 million into Gravis Robotics, a Zurich startup that gives heavy construction machinery autonomous control. The company says it is the largest Series A ever raised in construction robotics. Gravis spun out of the Swiss Federal Institute of Technology Zurich 4 years ago and sells a retrofit control kit, the Gravis Rack, that turns conventional excavators into self-operating machines rather than requiring new equipment. Chief Executive Ryan Luke Johns said the backing will let the company put Gravis-powered autonomy on every major job site. The investment continues a SoftBank pattern. It bought ABB's robotics division for more than $5 billion last October and has been selling down its stake in Boston Dynamics.
Turning to defense.
Smack Technologies, an Austin-based defense startup, has raised $61 million in a Series B to speed production of its military decision-making software and to build wearable AI hardware for the battlefield. Chief Executive Andy Markoff told Reuters that Pentagon pressure to field artificial intelligence faster is driving demand, and that disruption among defense AI suppliers earlier this year opened the door further. The company describes itself as a frontier AI lab for national security and frames its pitch around what it calls decision dominance, the ability to turn information into action faster than an adversary can. The raise lands in the same week the department awarded a separate autonomy contract worth $100 million.
Developer tools next.
Cursor has launched Origin, a code hosting platform aimed squarely at GitHub. The beta opened Monday to paying customers and lets developers sync existing repositories from GitHub with a few clicks, keeping them updated as upstream projects change. Integrations with Vercel, BuildKite, and Depot are live at launch. The timing was remarkable. Origin went out during a major GitHub outage, which dramatized exactly the argument Cursor is making about concentration risk in developer infrastructure. It also raises a question the company has not answered. Cursor now controls the editor where agents write code, the model those agents run on, and the repository where that code lives. Governance of the full stack remains unspecified.
Security follows.
Fortinet has acquired Virtue AI, a startup focused on runtime protection and automated validation for autonomous artificial intelligence systems. Financial terms were not disclosed. Fortinet said the amount is immaterial to its business. The technology folds into the company's AI native security fabric, which spans networks, endpoints, clouds, and applications, and complements a gateway product introduced earlier this year. Founder and Chief Executive Ken Xie said security has to evolve as quickly as AI is changing enterprise computing. The deal fits a broader pattern, where established security vendors are buying the ability to monitor agents at runtime rather than building it, as customers begin pushing autonomous systems into production.
Now to payments.
Razorpay has launched Vulcan, which the Indian fintech describes as the country's first transformer-based AI foundation model built specifically for payments. Developed with Nvidia and Amazon Web Services, the model scores payment routes in real time and flags fraud patterns that only become visible across multiple merchants. Razorpay says it lifts payment success rates by 8 to 10%. The context here is scale. India processes close to 23 billion unified payments interface transactions and around 590 million credit card payments every month. Razorpay, which is preparing for a public listing, says Vulcan will eventually handle authentication, routing, fraud detection, and lending decisions across its network.
Earnings season continues.
Baidu reported second quarter revenue of 31.3 billion renminbi, missing analyst estimates and falling about 4% from a year earlier. Adjusted earnings came in at 7.22 renminbi per American depositary share, well short of the 9.35 that FactSet had forecast. The results underline a difficult transition. Baidu's core search advertising business continues to erode as the company rebuilds it around generative AI, and growth in its AI cloud unit has not yet closed the gap. Management has been spending heavily on models and infrastructure while advertising softens. Investors have been waiting for evidence that AI products can replace what search is losing. This quarter did not provide it.
One more set of numbers.
Pony AI reported second quarter revenue of $36.2 million, up 68.8% from a year earlier. The headline figure was robotaxi services revenue, which rose 691% to $12.1 million as the company expanded both its fleet and its operating territory. Pony says its overseas robotaxi pipeline now exceeds 4,000 vehicles. Losses continue to widen as it scales, which is the central tension in autonomous driving. Building a fleet costs money long before the rides pay for it. Still, a nearly seven-fold jump in robotaxi revenue is the clearest signal yet that paid driverless service is becoming a real business.
That's your briefing for Tuesday, August 18th, 2026. For DX Today, stay curious.